Yo, what's really good, people? Welcome back to the channel. In today's video, we're going to take a look at Opendoor and why I'm so bullish on this stock. I absolutely hate giving price predictions. You guys know this by now, but I genuinely believe that this stock could probably 10x in the next 10 to 15 years. Listen, not all IPOs are created equal. I try and stay away from IPOs at least for the first 6 months, but they're definitely not all created equal. Not all growth stocks, not all tech stocks are created equal. Some are just there just for the just, and some solve a real problem in a simple and scalable way, to be honest. So yeah, in today's video, we're going to cover IPO B and why I'm so bullish on this stock. So please like the video. If you're going to like the video, subscribe to the channel, ring that notification bell, and if you want to talk more about stocks and if you want to support the channel, join the board members. The join button is down below. I've given 6 exclusive stock picks to the board members. Yeah, 3 last week, 3 this week, and you know what I mean, they're all doing so well. So yeah, definitely join the board if you want to get some of that deeper insight, if you just want to generally talk about strategies, portfolios, and what have you. But let's get straight into Opendoor. Opendoor is the second SPAC from Chamath Palihapitiya's social capital VC fund. Opendoor focuses on disrupting the real estate market by making it super simple to sell your home. All you got to do is enter your address. You'll get an offer within 24 hours. You can compare the various options that they give to you, and you can sell without even having to have any viewing. So it's so completely a real simple process. You can also buy homes on the platform, and you can also finance and refinance homes on the platform. So what is the problem that I alluded to earlier that they're trying to solve? Well, the real estate market is 1.6 trillion in size. It's had little to no disruption since, well, forever. It takes about 3 months on average for people to sell a home, and it's highly complex, and there's an average of about 6 counterparties per one home sale. It's actually quite a volatile business from the perspective that 20% of transactions fall through due to various reasons, such as inflexible timelines. Buyers might be backing out. There could be financing delays. It can get extremely costly. There's about 6 to 7 different fees that sellers will have to pay. And overall, it's just a very costly, a very painful, and a very stressful process. So there's a big opportunity for Opendoor to try and solve that pain point for users. Now, the opportunity is quite broad from the market perspective. So when you look at it, less than 0.1% of homes sold in the last quarter were sold online. And this is what Opendoor is going to try to increase and obviously take the lion's share of this business. So it's not like there's another player currently dominating. This is a business, is totally greenfield, and they're really probably the first mover in this space. Opendoor is effectively the middleman. So rather than you having to do the whole process yourself, they buy the house from sellers and they sell the house to buyers. So effectively, the only relationship you need to have is with Opendoor when you're actually making a sell or when you're making a buy. They take on the risk and the complexity for customers so that you guys have it simple. Selling a home takes less than a week with Opendoor. There's actually many stories of it taking just about 3 days to actually sell your property. So going from 3 months to 3 days is obviously a significant time saving. What they do is they use data and AI to accurately predict the price of your home based off similar sales of similar homes in a similar area, which is a common practice worldwide, to be honest. If you're going to get, your house valued by Foxtons or Bairstow Eves or any one of those other estate agents in the UK, Roger's just going to come round and he's going to value it, and he's basically going to look at, all of the properties that have been sold in your area pretty much on Zoopla or Rightmove, and he's going to basically use that data to do the same thing. So that's what they do, and it's pretty much the same thing, but I think they probably use data and AI a bit more intelligently to pretty much do that. They only require a video tour to approve the deal. So once they've obviously given you an offer and you accept, then you'll need to do a video tour, which they can obviously use to then inspect all of the nooks and crannies and make sure it's all above board, and then effectively they can approve the deal. And overall, this can take 3 days if everyone does their pieces and keeps it super simple and super straightforward. they cut costs for users from around 10% to 6%. Now, costs obviously vary depending on obviously the property, depending on the location, depending on the realtor that you're using. But just on average, broadly speaking, they cut costs from around on average 10% to on average about 6%. So typically sellers would pay a realtor about 6% of the house price, staging, which will be 1% of the house price, concessions, which should be about 2% of the house price, and then closing the sale, which would be about another 1% of the house price. But with Opendoor, what they do, they just have a 5% service charge, and that basically looks after everything from staging, concessions, and the realtor fees, and then 1% in closing costs. So effectively, that's the 10% down to the 6% effectively. So what they're doing is reducing and removing the real estate agent fees, which is, arguably the reason why realtors hate them. So I did some research on, realtors and their opinion on Opendoor, and just found that they all pretty much hate them. And that actually is a good sign for Opendoor, because it means they're actually causing a problem, and they're genuinely disrupting the market. Basically, there's what's called a six-party transaction concept in real estate. So effectively, there's 6 people that typically have to be involved in a transaction. And as I alluded to earlier, it's now 2 parties, which is effectively you and Opendoor. Selling is basically faster, it's cheaper, it's more convenient, it's hassle-free, with a lot more peace of mind. And you can effectively almost get in and out of property like you do stocks. It makes it a lot more attainable and a lot more liquid, I would say, for investors that have the capital to basically do so. Opendoor has got a first mover advantage. They've currently served about 50,000 homeowners and sold around $10 billion worth of homes on their platform. 500% growth from 2017 to 2019. That's 4.4 times more than any of the nearest competitors. So like I said in a portfolio update recently, that's 440% more homes than the nearest competitors, which are Zillow Instant Offers, Redfin Now, Amni, Zhome, Knock, OfferPad, Fairer. So there is a fair amount of competitors in the market, but Opendoor is clearly dwarfing them and clearly leading the way. You can even see that when you look at their share in Phoenix, where they have 5% market share. And obviously, if they can attract way more sellers, they'll attract more buyers. So it's the similar, I guess, growth hacking process that Uber would follow. For Uber to grow, what they focused on was drivers. They gave a $2,250 referral for each driver, whereas you get a $30 referral for each customer, because they know they need more drivers on the platform in order to attract customers. Airbnb did a similar thing by focusing on host. Netflix has done a similar thing by focusing on licensing content and then eventually actually commissioning their own original content. And Opendoor is doing the same thing for homes. If they focus on homes and actually buying and acquiring as much homes as possible, then effectively the buyers for those homes will come. So that's their focus at the moment, and that's why their expenses is going to be extremely high for the first, I'd probably say, 5 years of this business, because they're really going to be trying to grow the platform with as many homes as possible, and that's obviously going to have to be their main focus. Now, when you want to look at the market as a whole, there's about 6 million homes that are sold in the US every year. 25% of them is expected to be online in the next 15 years. Now, when I looked at that number, I thought, you know what, that's quite a small number, but obviously homes are considered purchases, and there is just naturally going to be a subset of people that just will not buy or sell their home online. So there is going to be a part of the market that Opendoor just unfortunately will not attract. So then when I looked at it from that lens, 25% actually was probably quite a fair reflection, and maybe a conservative reflection actually. Now, assuming no growth, that would basically be 1.5 million homes. Amazon controls 40% of the e-commerce market today. So if Opendoor was to do like the same thing, that would effectively work out to be 600,000 houses. Now, when you think the average price of a home in the US is $350,000, you're effectively talking about 210 billion in revenue by 2035, on average 10.5 billion per year. And that is probably around a 6 billion net margin. Again, all of these figures are complete forecasts, and they are subjective in a way, but this is just kind of a process that that has been looked at to see what those figures can potentially be. If you then look at potentially what the price to sales and price to earnings multiple might be, so if you added say a 10x or a 20x multiple, you're potentially looking at a company that's going to have about 120 billion market cap in about a 10 to 15 year period, and their current market cap is 10 billion. So effectively what you're seeing there is roughly a 10 to 12x in terms of, you know, their valuation. So, you know, you could potentially in 10 to 15 years look at a stock that might be worth $240, and currently the stock is trading at around $20. So it is a significant buying opportunity for those that can stomach it, and for those that's obviously going to want to hold this for the absolute long term. Now, looking at the way the tech market is, looking at the way the US market is, looking at the way investor perceptions and behaviors is changing, I actually think that some of those multiples are actually quite low. A 10x multiple or 20x multiple is quite low. I think you'd probably be looking at a bit higher. So I think, you know, the price range is probably in the region of $250 to about $750 if we're talking the latter end of that 15 years. So I think if you're talking right to the end of that 15-year period from now, then I think you could potentially be looking at anything from $250 to $750, just because when you look at other companies like Square, like Tesla, like Nvidia, their multiples are. One of the reasons why I personally think that is, I think, you know, if you think about the upper range, it can be obviously pushed if you think about expansion globally, maybe some of the interest that they can make off financing, more home financing, maybe more open door products such as leasing or commercial properties, or maybe even selling land. So I think there's so many ways that they can actually diversify this business and actually grow that revenue, and obviously international is potentially a big part of it as well. Currently they're obviously a loss-making business, and they've mentioned as well that Divock 91 has had a significant impact to the business. So I think it can definitely and will definitely be volatile for the next few years, but hopefully once it starts to, you know, get a modus operandi, it could potentially go well. I do think though there is 101 things that could potentially go wrong with this business. From a legal perspective, just look at Uber. You know, there's governments around the world that just banned Uber and wouldn't let Uber just, you know, rock in that territory. Look at Greece, for example, that, you know, you can't get an Uber if you go to Greece, as an example. And they wanted to obviously protect their own government taxis, as it's one of their main revenue drivers. You know, you're going to probably find, although most real estate agents are private, you're going to probably find some form of union somewhere, or somewhere where they're going to sort of band together, or in one region where the government probably has a bigger stake in the real estate market, where they're going to say, you know, Opendoor, just no, there's a closed door on you, to be honest. So I think they're probably going to have legal challenges globally. I think they're going to have bigger challenges from competitors, not just the ones domiciled in the US, but to potentially globally as well. And the ones domiciled in the US, I think also the big challenge with competitors is there's going to be a race to the bottom. So, you know, all they're going to really have at their disposal is to lower margins in order to increase the amount of properties that they're actually getting onto the platform. And so effectively, if Zillow has, you know, a big war chest and can actually reduce those fees from 6% to 4%, and, you know, potentially Redfin reduces it from 4% to 3%, then Opendoor is either going to be priced out, or they're going to have to reduce from 6% to 3%, and thus their revenues will significantly reduce as well. And they have to obviously make sure that they can meet their overheads and their expenses, which is going to be, you know, important for them as well. I think there's a risk of them also having too much inventory. So because they're taking on all of the risk, they're buying the property from you and they're holding on to it until they can sell it to someone else. They're not waiting to find a buyer and then matching you guys together. They're going to physically buy that property. So in 3 days, you won't have that property anymore. There is a potential that they might have too many properties on their platform that actually they're unable to shift. And there's obviously going to be maintenance costs and operational costs to maintain those properties as well. It's not like, you know, having too much movies on Netflix where there's probably a marginal cost for each movie. Like each movie is probably a marginal cost in terms of just having it on the platform, from licensing fees or from storage or data fees, etc., from their cloud storage provider, AWS or what have you. But obviously holding onto a property, you know, you might get asbestos, you might get rodents, you might get, you know, people burgling the property, you might get whole manner of things, fire damage. There could be so many different things that might happen to a property that's, not being shifted. So I think those costs are going to be quite significant for the business, and that's something that they're definitely going to have to be mindful of. I think also there's going to be a lot of different processes in international markets, which is going to be quite a challenge for the team to make it as simple as possible. So maybe the process that they've got in the US might not directly translate to the process that they want to try and do in the UK. So that's something that might potentially go wrong. And there's probably 101 other things that, I haven't, been able to think about as well. So I think there's definitely risk, and I wanted to spend some time telling you about the cons of a business. I don't like just talking about how everything can go, rosy daisy, because that's definitely not the case with the market or with any sort of business. But I do believe that those risks are mitigated and they are calculated, and I think the stock can do pretty well, and I think it could potentially become a good earner for you. So listen, remember, this isn't advice. Please do your own research. I'm not investing into this stock to trade or to make a quick buck. I'm genuinely investing into this for the long term. Unless something drastic happens. Some people say, you for the long term, but then you sold it sooner than you said you would do it. That's because, when different things come up, I have to make different decisions. No one can predict the future, right? So if something comes up that means I have to potentially change my approach, then I have to adapt and change my approach, and that's just the way things are. And that something could be, a wider market issue. That could be my own personal issue. My risk profile might have changed. There might be a circumstance with my portfolio. There might be an opportunity somewhere else that I need to take advantage of. There could be a manner of reason. So, ultimately, it's always good to go in with a goal and with a strategy, but you never know. You might have to change it along the road. In any case, my intention is that I'm going to be investing into this business for a long period. But definitely, please do your own research, and please do not consider this advice. But I just wanted to give you guys an update onto why I'm so bullish on this stock and why I'm definitely going to be investing into it. So listen, hope you found this video useful. In terms of how much I'm investing, I've invested about 75% of my current target amount, and I will aim to do 100% by the end of the year, which will require me selling some other positions, but I've kind of got that in mind of what I'm going to do. And then I'm just, happy to leave it. And if it drops considerably, then I will add more next year. But, hopefully it starts to rise from here on in, and then obviously I'm just going to leave this one and see how it goes. So yeah, like the video if you like the video, subscribe if you're new, ring that notification bell, join the board, stock strategies, portfolios, any other chat and more. And listen, have a good weekend, and I will catch you next time with another investing video. If you like this video, let me know other stocks you want me to do this for. Doesn't mean I'm going to do it, but it's always good to know what you guys want. And please like the video, man. I really would appreciate you guys liking this video so it gets out to more people and helps to grow the channel. Other than that, take care, guys. Peace.